What do you need to qualify for an FHA loan? Well, that's what we're going to discuss in today's video. Everything from down payment on an FHA loan to credit score requirements on FHA. I'm also going to go over employment as well as debt, and I'm going to tell you exactly what you need to do or where to go if you're looking to actually apply for an FHA loan in 2020. My name is Jeb Smith. I'm a real estate broker here in Southern California. And my channel is all about real estate and finance, helping buyers, helping sellers navigate the real estate world. So do me a favor, if you like content like this, hit that subscribe button. And if you like the video, give me a thumbs up. You know, I always go back and read the comments, so if you have questions about the information that I'm talking about in the video, leave them below. I'll go back and address those for you and give you the answers you need. So let's start in today's video talking about probably the most asked question when talking about FHA loans, and that is down payment. What do you need with regards to down payment in order to apply for an FHA loan? Well, most people know in applying for an FHA loan, you need at least 3.5% down. Now, what most people don't know is the down payment is dependent on your credit score. So if you have below a 580 credit score, the down payment's actually going to be higher than it is if you have above a 580 credit score. But if you have above a 580 credit score, the minimum down payment is going to be 3.5%. So, you know, in terms of talking about this, you know, a $100,000 purchase is going to require $3,500 in a down payment. Now, you know, as you go up, you can do the math. But you know, where can that down payment come from? It can come from a checking account, it can come from a savings account, it can come from a family member as a gift, but it can't be cash. You can't come into escrow with cash, so make sure that the money is seasoned. It has to be in a bank account, and again, it can come from a family member. Now, if your credit score is below that 580 threshold, FHA requires a 10% down payment. So again, if you're using that $100,000 purchase price, in this example, that's $10,000 that's going to be required in order to use FHA loan or the down payment on an FHA loan. Now keep in mind, there's likely going to be some closing costs in addition to the down payment, so you can't just show up into escrow with the $10,000 or the $3,500 in the earlier case that I mentioned. You're gonna have to have some additional money for closing costs. Now, closing costs, while I'm not going to discuss it in this video, can be paid by the seller. There are ways to negotiate that where the seller pays the closing costs, and I'll link to a video here where I've discussed that in more detail. But just know that you do need some additional funds in addition to that down payment when qualifying for FHA. The second thing, we just mentioned it a moment ago, but we'll talk about it in a little bit more detail here, is credit score. FHA goes as low as a 500 credit score. Now, while they go down to a 500 credit score, it's going to be difficult to find a lender out there that will actually do a loan for you if you have credit scores in the low 500s. You know, most lenders these days want to see somewhere around 580 or better in order to apply for FHA loans. And I've mentioned this in other videos. While the requirements for FHA are 500, what you have is lenders out there having their own overlays on those programs because they don't want to do loans with lower credit scores just because they're riskier, you know, higher, you know, default rates, etc. So that's why FHA really, or most lenders out there, really want to see 580 or more in this market in order to do an FHA loan. The next thing is going to be debt. You have to have manageable debt. What do I mean by that? Well, FHA has certain debt to income requirements that they want to see in order for you to qualify for a loan. What does that mean? That means you can't have more than a certain amount of your income going out towards debt every single month. So what they do is they look at your gross monthly income. They take that and they get a monthly rate of your monthly income, so that gross monthly income. And FHA really doesn't want to see you around, you know, anywhere above 45% of your income. So if you made $10,000 a month, using that as an easy example, they don't want to see you spending more than $4,500 a month on your mortgage, on your taxes, on your insurance, on, you know, student loans, car payments, credit cards, all of that stuff. But They do have exceptions. So I've seen FHA loans get approved as high as 57, 58% of the debt to income ratio. So if we're using that same example, they would allow you to use $5,700, $5,800 per month if you made $10 or $10,000 per month towards debt, which means that you could qualify for more loan in that case. But the lower debt you have, the more manageable your debt is, the more likely you are to qualify for an FHA loan. The next thing, employment. What do you need with regards to employment? Well, first off, you need a job. I had someone contact me recently, said that they were on unemployment, they were currently unemployed, and asked me if they can qualify. No, you actually need a job. You need you need to be in your occupation for 2 years. That doesn't mean you need to be at the same job for 2 years. You just need to be in the same line of work for 2 years. You can't have gone from self-employed to W-2 to self-employed within that time period. FHA really wants to see some consistency in your employment. So if you were, an HR director, if you will, or in the HR business, they want to see that you're somewhere in that occupation for around 2 years in order for you to qualify for a loan. If you're self-employed, they need 2 years of self-employment of consistent income during that time in order for you to qualify. So, those are some things to think about when applying for FHA loans, is that you do need consistent employment, you do need manageable debt, as well as some sort of down payment and a decent credit score. So, the last thing would be when qualifying for an FHA loan, there is an appraisal that takes place as part of FHA's loan qualifications, and that appraisal would have to come in at the value of the property in order for them to lend the money on it. If it comes in less, then you have to renegotiate the contract and or come up with the difference in order to make the loan go forward. So FHA does have some requirements that appraisers look for when looking at property. You can't have flaking paint on the property. There's some other things that I'm not going to get into detail here, but the property more or less has to appraise. So that would be the last thing that you need in order to qualify for an FHA loan. Now the question comes, how do you qualify for an FHA loan? If you wanted to go out today and get approved for an FHA loan, where do you go? Most people think, well, I can just go to my bank and get approved. And while that is the case, I would highly recommend getting another source as well. Banks tend to lend within their own parameters. They have a box, if you will, and if it doesn't fit inside that box, they won't lend on it. And so that's one of those things where, FHA likes to see certain debt to income ratios where you might go out and qualify with a broker, and the broker can go up to higher debt to income ratios, that 57, 58%. So to answer your question, I would speak to a mortgage broker. Regardless of the area that you're in the United States, there is a mortgage broker in that area, and those brokers tend to have access to more programs, more options, especially when trying to qualify for FHA. They also have the ability to shop rates. So I would lean more towards a mortgage broker when trying to apply for a loan. How do you get in contact with one? Might ask a friend or a family member for a referral who did their loan. That's a good place to start. You can also reach out to me. I'm happy to direct you to someone in your state that can help you through that process. Now, keep in mind, as a real estate agent, there's no benefit to me other than helping you in order to make that referral. I don't make any money. I don't get any kickbacks. There's none of that. It's merely me helping you get what you need and try to get through that process. So do me a favor, reach out to me directly if you need that referral, and if you're looking to buy, if you don't have a real estate agent, I can help you in that regard as well by connecting you with someone in your area that does a good job. That's one of the things that I do quite often is network, and I have a lot of people that can definitely guide you in the right direction. So I hope that was helpful in today's video. If you do have questions, if there's something about FHA that you want me to address further, leave it below. I'm happy to go back to it and make another video on it and or answer your questions. So for now, I appreciate you taking the time to watch. I appreciate your support. If you haven't already, hit that like button, subscribe to my channel, and we'll see you again soon. Have an awesome day. Bye-bye.